Perfect. Hey, everybody. Welcome to Ask the Accountant. So this is part of the SOS Small Biz Success and Salon series that we're going to be doing throughout all of 2022. And we're starting out today with our dear friend, April McDaniel from Kopsa Otte. I'll let her introduce herself here in just a little bit, but I just want to kind of give you guys a welcome hello. I know some of you are going to be joining us live, so I'm going to kind of keep an eye on my phone for questions that are coming up for us live. I know many of you sent a nice little email and said, hey, Bonnie, is there any way that I can get this link afterwards to listen to the replay? And this is how this is going to work. So this is live in the Facebook group. So if you'll have access to this if you are a member of the SOS Small Biz Success Facebook group that we're in right now going live. So you have access to it from here on out to be able to watch the replay. I'm also going to be uploading this onto YouTube, and I'll make sure that any of you guys that reached out to me directly, or even April, that she'll have the link to the YouTube that you can access it that way as well. We're going to convert this into another podcast. So you'll be able to get it on Spotify, Anchor, Google Play, and iTunes as well. So because April is a CPA and an accountant, there are some disclaimers that we're probably going to need to make sure that we share in regards to this, so that you guys understand and know that, these are not necessarily advice or recommendations, but we are going to answer the questions the best that we can. And we've got lots of questions kind of already housed and ready to go. But you guys, I just want to share with you that part of what we're doing here with this SOS series this year and inviting guests onto the podcast and guests to be able to do some lives with us is because I think that we're at this place now that we've worked really hard over the last couple of years. And now we need to figure out that space of where do I need to be putting my, what I call the timer method: time, energy, money, and resources. Okay. Time, money, energy, and resources. Where do I need to be putting that? Because I think that we get overwhelmed in thinking we need to keep doing more than we should be doing in order to reach the goals that we have. So we're all about here at the SOS coaching program and podcast is being able to focus on the SUM strategy: sales, operation, mindset, marketing, and education. Now, today, my friend April, she is going to tap into the operation side of things: financial, tax, accounting issues for us for sure. But I want you to get to know April even after the Ask the Accountant today, because she has a tremendous amount of wealth of knowledge in regards to mindset as too. I always say that I get incredibly intimidated when I meet with my bookkeeper and accountant because it's not my thing. It's not what I want to be spending my days doing. So I make sure that I hire the right people to be able to take care of me in the areas that I feel I'm a deficit in, and stay focused on the areas that I'm a real asset in. But I'm still intimidated no matter what at the end of the day. And I can tell you guys that April is the least intimidating person. She's a wealth of knowledge, but she also can help you with just that mindset approach too, of feeling good about your business and being business savvy in that. Now, before we end, and even midway through this program here, I'm going to introduce you guys to a webinar that April is going to be doing coming up on February 21st. So stay tuned for that. I'll also make sure all of these things go into the comments below so that you can access links to be able to sign up for those programs. So April, I'm going to turn it over to you, and I'm going to check my phone because I would love for you to do two things. One, introduce yourself in the most beautiful way that you can, but also then give us a little bit about Kopsa Otte, the organization that you work for, what you guys offer, who your customers mainly are, and give people that sense of if they might be a good fit for you. Now, today, for sure, we're talking to the entire industry. So whether you're a stylist, an independent, a booth renter, a suite renter, a beauty brand, manufacturer, or distributor in our organization and industry, or ultimately a salon owner, which is a lot of these questions are going to really support and focus in on the small business salon owner. But today we're going to talk to all of you guys, but April will share with you a little bit more about herself and Kopsa Otte now.
Thanks, Bonnie, for introducing me. There is no reason you should be intimidated by your bookkeeper or your accountant. No reason at all. You're such a smart lady. Thank you so much, everyone, for joining us today. Like Bonnie said, my name is April McDaniel, and I am a CPA. with Kopsa Otte. Kopsa Otte is located in York, Nebraska, and we have a great niche in the salon and spa industry. We work with salons and spas in 43 states across the country. And we also work with distributors, state RDA distributors in the region. And then our other niche is agriculture. And you probably wonder why agriculture when you have these other beauty industry related niches, but it's because we're in Nebraska and Nebraska is big on agriculture. So I, here at Kopsa Otte, my role is that I get the opportunity to do things like this, education, both traveling education. I love to talk to salon owners about their businesses. I do that also with our clients, a lot of financial statement, succession planning, special project type things, trying to help people just survive in the business world, I guess, is one of my biggest roles here. But first and foremost, I'm a wife and a mom. And I think that's really important. I think it's important that we embrace that. Everybody embrace that. You know, you as a person is really so much more important than what you do for a job. I think that because I'm a good mom and I strive to be a really good wife, that that makes me good at my day-to-day job too. But I love my kids. I love my husband. I love what I do. I get an opportunity to visit with wonderful business owners across the country, from training and education to getting down to the numbers on a financial statement. It's just a ton of fun. To talk a little bit about what Kopsa Otte is looking for as far as an ideal client, I'll do that really quickly here. I don't want this to be a sales pitch. You know, Kopsa Otte over the years has figured out what really makes a good fit for us. And typically that is an owner of a salon that's an employee-based salon. Probably our sweet spot is over 500,000. I'd say our ideal probably is between $1 million and $2 million for gross sales. And we are looking for clients that really want to be good business people. You need to be reporting all your tips. That is one thing that if you answer no to that question, I'm going to send you all kinds of reasons to do it right. We're going to talk about that today. But in order to be our client, you have to be doing that right, or you have to be willing to work to get that right. You have to be on QuickBooks Online. You need to have a bookkeeper. We need to be able to help you with your personal income tax return too. So if you're an S corporation or a partnership, we do look for the opportunity to help you with personal tax planning at the same time. And those are our main requirements. But it's really important to us to do things like this. It's important for us to educate industry-wide, whether you are a single stylist that is renting a booth, or you are that owner, maybe you're a multi-location owner even, you know, it's important for us to do this education. We kind of call it our give back, I guess. I'm not out here to market for clients. I'm here to educate you about what's going on in the industry and what's going on in tax world. So I'm happy to do it and excited to be here.
Perfect. Well, will you, you know, because I've already had a client that asked me just before we went live, April, how they can reach you to be able to get that consultation and see if they're a good fit for you. So can you just share that, and then I'll make sure that that gets posted on here.
Sure. Probably the best way is to go to our website. It's kopsaotte.com. So I'm going to spell that. It's KOPSAOTTE.com. And then there is a contact us button. So if you contact us, then we'll ask you some questions. We'll send you out some information. And then we're not going to waste your time if you answer no to some questions that just mean that we need to work on a few things before you're ready to be a client. We're going to tell you what to do in order to prepare to be a Kopsa Otte client. And if we think we're ready to go to the next step, we're going to ask for some tax returns, and then we're going to get together and talk about them.
Perfect. Good. All right. So I put on the, you guys, a Facebook page in the comments. I just put, you know, www.kopsaotte.com, get hit the contact us button, and they'll reach out to you to be able to set up that time to talk and take you to those next steps to do that. All right, so we got that out of the way. Now we got lots of questions that came in advance, and I see that Marva's here with us. So thanks, Marva, for joining us. And please, Marva, go ahead and let us know in the comments if you have a specific question you'd like to ask as well. Now, what seems to be burning out there on all of the feeds, April, is this Venmo stuff. And there's like mixed messages and misinformation. And the last post that I saw going around was my accountant or bookkeeper gave me this to share. And at the bottom, it was quite frightening because it was making it sound like they were suggesting and telling them to tell their clients that they're friends or family and that this is not business. So I know we need to clear the air on this, and I'm going to just take it from here to discuss like really what this is and why, what's the benefits for all of this, and why are people scared?
Well, I think shame on that accountant for making somebody want to try to do something that's against the law. Really, the focus here is on unreported income or underreported income. And it's not that this is a new tax. This is a new reporting requirement that Venmo and PayPal have to do. So if you think about processing of credit card transactions, back probably about 12, 15 years ago, there was a new requirement for credit card processing companies to issue what's called a 1099-K to the businesses that they were processing credit cards for. And in doing that, there was some standards set or some minimum. So what it was that anybody that processed payments of over $20,000 and more than 200 transactions, that credit card processing company had to issue a 1099-K. Now, what's the IRS trying to do? They're using that as a matching document, is what they're doing. So they take that 1099-K and they agree it to the business's gross revenue, and they assume that you also have cash sales. So every single industry has an average cash sales versus credit card sales. We know that's changing over time because people are using more and more credit cards, debit cards, and things like that. So what's happened is with this Venmo and PayPal becoming such a thing and people accepting funds and payments through that process, is that the IRS has now said, look, we're not saying that you get to go find a different way of getting money. This is not how this is going to work. And so what they've done is they've taken those requirements down or taken down that threshold, and now it's $600. So it used to be 20,000, now it's 600, and they've expanded that to like Venmo and PayPal. So it's not what they're doing is they're saying, you tried to get around us by using Venmo and PayPal, and we've figured you out. And so it's not that it's a new tax. It's just that now Venmo and PayPal have to say what they're doing.
Okay. Now this $600 from 20,000, that is a 2022 reporting. So anything in 2021 that people are doing their taxes with at this point, it's as it has been, which in this case, most people, if you didn't do more than $20,000 in any of these, you wouldn't be getting a 1099-K anyway.
Right. They wouldn't get one anyway. But keep in mind, this isn't a new tax. If you were using Venmo or PayPal in 2021 or 2020, you were supposed to be reporting that income. Yes. If you were receiving it for doing a service or you sold something, not like I sold my couch that was a used couch and it was a loss, but if you're using it to process business transactions, this isn't a new tax. This is just the IRS saying, now we're going to find you.
It's a cross-reference system. Yes. You should be claiming this as income anyway. And now we're just asking you to make sure that it's cross-referenced. So, so here's a couple examples that my clients are being faced with. One, because cash is not relevant. And certainly when COVID came out, nobody was touching cash and we were all freaked out by dirty cash, right? Not that we should ever be calling cash dirty, but you know what I mean? And so, a lot of the stylists wanted to have their cash tips then processed through Venmo.
Right.
We obviously, in our salon too, and many other salons, you let tips go onto credit cards as well. So those things are already being taxed and recorded based on that. And I know this is a question that we are going to step into later as well, as tax tip relief.
Sure.
But now we've got stylists that are doing Venmo instead of cash with some of their clients if their clients didn't want to add it to a credit card. So what you're saying is you still, at the end of the year, you probably should go on and see how much money came from Venmo, how much of it was then would be considered income. Tips are considered income, and you're going to make sure that those funds are being applied to your income and revenue for your tax returns.
Correct.
Okay.
Correct. And if we can just touch on tips for a second, and then I'm sure we're going to get into it even deeper, but, as an owner of an employee-based salon, whether that tip is getting paid on a credit card or cash or Venmo, Tippy, any of those places, it's all supposed to be reported on the W-2 for your employee. Because it's subject to FICA tax and it's subject to ordinary income tax. So telling your employee, yeah, go get Venmo, then you don't have to pay FICA tax. Shame on you, because that's not the way that it's supposed to work. And in all honesty, if we underreport our income when we go to get a loan or we go to file for Social Security income when we're older, it just means that you might not get the loan, or you may not get the Social Security income that you're supposed to be getting.
You wouldn't qualify if you had a higher income. So reporting a higher income, paying the taxes, this is what it's called being an American.
Yeah.
And so this would do. Now, the second scenario is for more independent or suite people, where their clients are absolutely paying them directly through these types of services, whether it's Venmo, PayPal, Stripe, or Square type of thing. What I keep seeing coming up, and actually I don't know the answer to this, that are there, like all of my accounts, I had to put in my EIN number, and they're classified as business accounts. So of course I record them onto my taxes. But some of these, like Venmo, are considered non-business. Do they have a business and a non-business now, or is it just one Venmo still, and people just need to keep better records?
There will be an opportunity, if there's not already, I haven't checked, that you will be able to choose whether it's business or personal. And you have to remember, when Venmo and PayPal came out, the intention of those services was not to be a transactional business for somebody's operations. They were for, hey, we went out to dinner tonight, Bonnie, and we're going to split the check and I'm going to pay you back. That's what they were for. It wasn't, you colored my hair and I owe you $150 and I'm going to pay you $150. That wasn't what they were for. So, they are making improvements because they have to be able to apply by this law too. And you then, when you're using that service, are going to have to select whether that transaction is related to a business, or if it was, yeah, Bonnie just paid me back for half the check. So that's going to be really important. There's added on problems, I think, for this, because think about this for a second. I'm a salon owner and I report 100% of tips on our payroll. I expect my employees every week to tell me what they got in cash tips through Venmo, which is what you're supposed to do, or through cash or whatever. And I do that. Now my employee gets a 1099-K from Venmo and the income's reported on their W-2. All of a sudden, we've got an issue that we have to figure out. And so as the employee that's maybe getting cash tips, you're going to have to be able to tell your accountant that, see, this was reported to the owner. This is what I reported. It's already been reported and FICA's already been taken out. Because if you don't, then there's an unreconciled difference there that you could end up paying double tax on it.
And is there penalty towards the owner in regards to this too?
So the IRS right now, everybody knows this, but the IRS right now is so overwhelmed that they are not doing a lot of audits. In the Build Better Act, there is, which is drafted, it's not passed, there is money in there to help with enforcement for the IRS to be able to audit things like this. Now, the beauty industry being such a cash intensive business, it is one of the top areas that they do look at when they start looking at possible fraud or unreported income. The restaurant industry is another one. Okay.
Mhm.
So, it's not, and what happens is the owner has some opportunity to protect themselves. There are programs, there's a tip program that the IRS has that you can do these certain steps, provide education, make sure you're getting weekly tip reports, and do some things, make sure you're paying the tax. And then it doesn't give you a free pass from getting audited, but it does help you so that you possibly wouldn't get selected for an audit. And if you did, it would just be to look at that documentation. But let's say you didn't do that and you got audited and they found out that you weren't reporting tips. There's no statute of limitation for fraud. So the IRS can actually go back as long as they want to determine what to charge, what you owe in back tax.
Yeah.
And I have some sunshine coming through my window. And so I'm going to fix that because you can't see me probably very well anymore.
Okay,
So,
perfect. Well, good, because at this point, I'm going to check on Facebook here. It looks like we got a question coming in. So,
great.
Yeah. And okay, so I just want to reiterate what you did because that was a great little transition there. The IRS is overwhelmed right now. Is it just because they haven't? Is there more small businesses? Is there more business? Like, how is it that all these agents that we've had for all these years is not enough?
Well, keep in mind that during COVID, they were closed.
Oh, so they're just behind
They're
and
behind.
overwhelmed, and it's going to be a little bit to catch up. So one of the things was to be able to increase that and build back better. But again, like you said, that hasn't passed. It's just drafted.
Well, and keep in mind that, so the IRS has automatic notices that get sent out. Automatic things happen. So let's say they didn't get your 20 return by the deadline, according to their records, okay? They had hundreds of thousands of unopened packages sitting around that they hadn't gotten to. But their systems say you never checked in a 20 return, so we're going to send you a notice and it's late. But yet it's sitting in some place somewhere just waiting to be opened.
Waiting to be opened.
So what's happening is that now the IRS is so far behind and they have numerous notices that were just automatically sent out. So organizations like the AICPA, which is the American Institute of CPAs, and other or tax-based organizations are reaching out to the IRS and saying, stop with the automatic notices.
Yes.
Because
it's freaking people out.
It's freaking people out. There's, you've got a late return filer fee. You have all these things that are happening when the reality is it might be sitting in a U-Haul trailer somewhere, just not even opened. So it's a struggle beyond, beyond just not having enough people there. There's just a lot of things that have happened. And then of course they're processing all of these ERC credits, which are amended returns. Do you want to talk about that for a minute?
Yeah, let's, because then I think that's going to parlay into more of these other questions that we have banked here at this point. So yeah,
okay.
So talk to us about this ERC credit, because there's again a lot of confusion and misinformation about that.
Right. So the employee retention credit was available during 2020 and 2021. When it originally came out, if you had a paycheck protection plan loan, you didn't qualify. You couldn't take both of those. You couldn't have a PPP loan and an ERC credit. Well, December 26th or 28th of 2020, the IRS came out and said, oh, we were kidding. Actually, it wasn't the IRS. I shouldn't blame the IRS. It was Congress. They said, we're going to expand this. We're going to say, if you got the paycheck protection plan loan and you can qualify for the employee retention credit, we'll let you get both of them. Okay. And so how to get the employee retention credit, you had to amend your quarterly payroll reports, which are your 941s. And so not only does the IRS have all these other things going on, we have amended 941s that have been sent in, and then people waiting for money to get back on those.
That's why it's taking so long.
Yes, it's
people
taking
are
a really
thinking,
long time.
why is this not? Why don't
I have my money
processing?
Yep. Yep. And so, that's another thing to be thinking about. And the IRS is saying, don't even call us. They're answering like 12% of their mail or their phone calls or something like that, 10 to 15%. They don't have enough time to answer the calls and process the mail. So if we can only call them if we have an emergency, which we actually have a person here, they spend 1 day a week, every week, calling the IRS on stuff we have going on. But we have to let them process things or no one's ever going to get it. Now, the ERC credit options or opportunities that expired at the end of September in 2021. So if you haven't claimed those credits, though, you need to talk to your accountant. And that really doesn't apply to our single stylist booth renters. That's
Right.
our owners that have employees. Okay.
Right.
So, or small business owners, not just salons, but if you are a business owner and you have employees, you need to talk to your CPA about the ERC. Now, if you've already filed your 20 return, which I hope you have, you may have to amend that return if you file for the ERC, but it's cash in your pocket, non-taxable income, cash in your pocket. You do not get to deduct the payroll tax associated with it, but it's a great credit. It's money in the bank. There's two other things that I want to talk about on COVID related programs. Sorry, Bonnie.
No, this is perfect. Let's wrap things up.
One is the FFCRA credits. Those are credits that as a business owner with employees, if you paid somebody for COVID leave, you could get money back as a credit. That expired at the end of December. Okay, so those aren't available anymore, which is kind of sad because obviously we have this Omicron that's out now. And so we have people that are out again, but that ended. Now there's an exception to that. There are some states that put together a program. So you might want to check with your state. If you have people that are out that need to get paid or that you want to pay them, check with your state to see if they have something. So ERC we talked about. We talked about FFCRA credits, EIDL loans or EIDL loans. Red flags here. Sometimes when I'm talking to folks or hearing out in the industry, I'm hearing about people using those funds to do things that maybe the loan wasn't intended for. So I'm not a bank person. That's not my role, but we do call ourselves issue spotters. So what I want you to do if you have an EIDL loan, which is an economic injury disaster loan, is I want you to make sure to read the fine print. Talk to your loan advisor. Make sure that you know what you can use that loan for. I don't want you to get in trouble if they come back and want to look at that loan and you've used it for the wrong thing. Okay, final thing, PPP2. If you haven't filed for loan forgiveness, you probably want to look at that. You are supposed to file for loan forgiveness anytime after you've spent the funds or after 24 weeks. And you want to make sure that if you haven't filed, that you include whoever's going to do your ERC credit calculation, because we want you to maximize both, because you can get both. And if you put all the payroll on PPP and you don't have any left on ERC, then you kind of have cut your hand off. And so we want to make sure you do that right. So talk to your accountant. Again, that's if you have employees and you had a PPP loan and an ERC and you have possibly ERC credits.
Okay, yeah, that makes sense. That makes sense. So what does the FFC, what's that? What does that one stand for?
Oh, I can't even remember what it stands for, but it's sick leave.
Okay. Now, was there a time that they
Family First Coronavirus Response Act?
Yes.
Yeah.
Very good. Very good. I know I kind of put you on the spot on that.
No, that's okay. I should have remembered, but
Did they need to be out? This was at the time when it was a 10-day window, like you couldn't come back for 10 days. So that's kind of what that was applied to, that if they had to be out of work for 10 days and the employer was still required to pay them their salary, the employer has the opportunity to get those funds back. Okay.
Right.
All right. And then don't be out
that,
buying any Porsches on the EIDL loan.
Right. And keep in mind on that FFCRA credit that when those requirements came out, it expanded that benefit to employers that employed less than 50. So it wasn't just for the bigger ones. There were some exemptions for small ones. You'd want to talk to your accountant about that too. But you know, if you have those circumstances, This is the time when it's good to have a professional in your corner that understands what's changing, because it's changing a lot all the time.
Yeah. So Marva does have a question here that is related to this, and then we'll go back to Marva's question that she asked earlier. So does the ERC go to the employee or the employer?
It goes to the employer.
Right. And she said from 2019, but it wouldn't apply to 2019. It would only be 20 and 2021.
Correct.
Okay.
Correct.
All right. Yeah. Hope that answered that question, Marva. And then good. All right. So we wrapped up all this COVID stuff that's going on. That, listen, we all had to become bookkeepers and accountants and researchers and mini CPAs during all of this, because there was relief out there for us, and we needed to take advantage of it because our businesses were definitely in survival mode, and some beyond that, they were suffering.
While you became a bookkeeper and accountant, I became a life coach.
Yeah, I did. It was like, my clients would ask me, and I'd be like, well, I'm going to have to research this because I don't know the answer, or I'm going to have to talk with my bookkeeper or accountant to be able to see what they have to say. And you guys, that's one of the reasons why we're doing this here with April, is because April wants to make sure that everybody in our industry is getting the information, not just their base of clients, because there's a lot of people that fall in between those gray areas and may not be sure how they can qualify for some of these things, or that they did qualify or do qualify. Now, any of these things at this point, like you said, go back and ask your accountant or your CPA if they can still qualify for some of these things that have since ended.
Yeah. And honestly, to get the 2020 or 2021 ERC, it takes amending tax returns. And so if you are eligible, that's the first thing. Talk to your CPA to determine if you're eligible. If you're eligible, then have them quantify it for you. If you qualify for, $20,000, $200,000 in an ERC credit, that's worth the money to pay them to amend your tax returns.
Yes.
Okay.
Yes.
If you only qualify for a couple $100 or $1,200, it doesn't make any sense.
Now, April, at this point, do you know that ERCs have been paid out, or you think, okay, some of them have? I was going to say, because a lot I'm hearing are still, they have not heard back. They're in process.
Right.
The data is there, but they feel like they're stagnant, but this makes sense to me now.
Yeah, there's actually probably more that are pending than there are that have received them. Okay. If you, I'll tell you our experience here. Here at Kopsa Otte, we also do payroll. So when the ERC credits became available for our payroll clients that we had control of when those original 941s got filed, we filed the 941 with that ERC on it, the original one. So they have it, they are getting them. Okay. The amended ones are the ones that are next in line. And we've started to see some of the amended ones. So if you're using an ADP or a Paychex or one of those companies, we had clients that use those companies too, and we amended those returns. We've started to see some of those come through for 2020. We have not seen 2021 yet, but we have seen 2020. So it's all about patience and waiting for those. They're big dollars. Really big dollars.
It's and it's an incredible resource for businesses right now to be able to recuperate some of that lost income, lost revenue, where we were still paying employees in a sense, to be in our business and keep it going. Without the revenue. Yeah.
For sure. I want to clear this right now because I know what's going to happen. I know that I'm going to get an email or I'm going to get a question for somebody. Can you do my ERC even though I'm not a client? And the answer to that is no. Okay. I want to be very upfront about that. Your CPA needs to do that. Okay.
Or even some of the CPAs are aligned with companies that specifically are doing that, so that it would be a resource from them.
Right. Now, if you are a Kopsa Otte EIDL client and you want to become a client going forward, we may be able to help you and help advise on that amended return. But typically we don't do that. We want to make sure that we're taking really great care of our current clients when projects like that come up. We even know of CPA firms that didn't even take on those projects because their firm could not handle the stress and the weight of doing those. Our workload probably increased 40% during COVID because of all these programs.
Yeah.
So
Makes sense.
I just wanted to clear the air there.
No, I'm glad you did, but that's the benefits of being a Kopsa Otte client.
Yeah, for sure.
Again, that makes a lot of sense there. I'm going to go back to Marva's question here before we move on. So Marva is a salon owner, and but her teams are all renters, and she is in QuickBooks for self-employed. Is that good enough for her? And are there benefits for her to for me or only my accountant to go to Simple Books program?
Well, Marva, thanks for your question. Really, I would say your bookkeeper that's helping you probably could make a better recommendation for you than I can. When we look at QuickBooks online, whether you need Simple Start or Enterprise or the advanced version, we really look at what kinds of transactions you're processing. Now, it sounds like to me you probably have yourself that you're processing all your transactions for, and then you probably have booth rent coming in, and that's maybe that's it. And so maybe Simple Start works for you. Now, if you have, you know, if you happen to be an S corporation personally, then you have payroll. So there are some other things in QuickBooks that you need to process payroll. Okay, so sorry, it's not an easy question for me to answer. I think it would take someone who truly knows your business to really look in there, or maybe call Intuit. You know, Intuit has a really great customer service support line, and they might be able to help you with that.
Perfect. Good. Thanks, Margaret, for that question as well. All right. So we got some other questions that came in that they weren't able to make it live. So these people are going to be listening to the replay here. So I'm going to jot down just some time so that I can also let them know when we're answering their question here. All right. So Shelley, at 2:36 p.m. Eastern, so 2:36 into it. Shelley says that, you know, oh, hers was about the Venmo tips, but I'm going to read it anyway, just in case there was something we missed. I'm assuming that they're going to send 1099s. Obviously, we do tip reporting. So the other question, if we do accept Venmo, do we remove that from tip reporting on our payroll? Because they'll get 1099s.
No.
Okay. And have to pay taxes on that. It seems pretty confusing. I'm afraid I'm going to open up this for a payroll audit. No.
Stop letting them use Venmo for tips.
Okay. Yeah, and I believe that there's none of the choice, meaning that when it's issued. Okay, perfect. All right, that answered Shelley's question. Brock, he's an independent, and he was looking for an opportunity to be able to find out some of the write-offs and everything that he might not be thinking about as an independent contractor. What deductions, maybe these obscure ones, April, that you know that we wouldn't think of for Brock?
First, what I tell you to do is just hop on Google and Google Schedule C, IRS Schedule C, okay? Because as an independent, if you're filing a Schedule C on your personal income tax return, which means you don't file a separate tax return for your business, you can get on there and it's going to list out for you the areas where you can deduct expenses. And I'm just going to say them really quick here, and then I'll talk to you about the ones that we see that are missed or not done right. Advertising, car and truck expenses. Now that's one where you want to be pretty careful. Commissions, fees that you pay, contract labor, depreciation, insurance, interest on mortgages, any other interest that you might pay. Maybe you're renting some equipment. Legal and professional fees are deductible. Office expenses, pensions, profit sharings, rent on a vehicle. Now there again, I'm saying auto, make sure you're careful about that. Rent on other equipment, maybe repairs and maintenance on things, supplies. So, you know, obviously your cost of goods sold supplies are deductible, things that you're buying like hair color and your tools, your you know, your foils, things like that. Travel for business is deductible. Let's see what else. Utilities, wages, you know, just Google Schedule C. And that's a really great place to start to see what those things are. Now, what do we see that people miss, or that where people really mess up? Track your mileage. Now, you either get, if you qualify, you either can deduct part of a vehicle, or you can get paid back yourself for mileage and track your mileage and take that as a business deduction. Okay. Most of the time for a salon owner or a suite owner, a vehicle is not used enough just for the business to be deductible, okay? Because a vehicle that's used for going back and forth to work, a commute, that's not deductible. It's when I go to the supply house or when I travel to a salon show, that mileage is deductible. It's not deductible when I'm just driving from my house to my suite, okay? So track your mileage when you're doing those other things. And keep in mind that if you have to maybe go pick the kids up at school and you also have to go to the supply house, make sure you keep track of those things, because if the supply house is on the way to get the kids at school or something like that, maybe you get pieces of that to be deductible, okay? Now, there are things like Mileage IQ. That's an app you can put on your phone that you can use for doing that, or you just put a little log in your car to keep track of it. The other thing that we see sometimes that people miss are meals. Meals that are for business are deductible. Now, with some changes in the tax law just last year, meals went from 50% deductible to 100% deductible. They're only 100% deductible for 2021 and 2022, and they have to come from a restaurant, okay? So if you do a takeout meal or a coffee shop, a bar maybe, or a hot dog stand, for example, those are considered restaurants and it's 100% deductible as long as it's for a business. You can't go eat at a restaurant every night with your spouse and write it down as a deduction for your business. Now, if your spouse and you meet and you talk about how to move the salon forward and you can document business purpose for that dinner, then yes, of course that qualifies, but not every day for lunch or every night. So think about things that maybe you buy at the 7-Eleven or a Casey's store or some convenience store. Those types of things would not be 100% deductible. They're 50% deductible, okay? This is different. This is different than what it was. If you remember in the Tax Cuts and Jobs Act that came out in 2017, meals either became 50% or 100% deductible. And really the only thing that was 100% was things like parties for staff, and things like that. It wasn't, all of these other things, but restaurants are 100% deductible for 2021 and 22. The other thing I would tell you, if you're a suite renter, is somewhere you're having to manage your business. So you may qualify for office in the home. Talk to your tax professional about whether or not you qualify for office in the home. Now, to have an office in the home, it has to be a separate room, has to be used solely for an office, can't be a spare bedroom. And why do I say that? The IRS actually has audited people and gone to their homes to find out that there's a spare bed in that room, and then it doesn't qualify. So don't get yourself thrown out for having a futon in the room, okay? That's kind of a joke, but talk to your tax advisor about office in the home. The other thing is inventory. Now I know quite possibly as a suite renter, you don't have a lot of inventory, but if you do, and always it's important at the end of the year to count your inventory. You want to make sure that you are getting write-offs for stale inventory. And a lot of times if you're cash basis, when you pay for the inventory, it's a write-off anyway, but sometimes that doesn't happen. So make sure you're watching for that. The final thing, because I know that we've been talking on this for a while. Go ahead.
Just before you go to the final thing on inventory, does that include retail and back bar?
That would be, you should always count both, okay? But retail, you don't get to write it all off.
Okay, so this would be any of your back bar inventory that's still sitting there that you haven't moved through at the end of the year. What's the value of that?
Right.
Okay, gotcha.
Yep. And then the final thing would be to always be, now I know you think you're a simple salon because you're a one-person deal, but I will tell you that is where success starts. Success starts at that suite, and you move on to having the opportunity maybe to be that owner, okay? So set yourself up for being successful, for being that owner. And someday you'll thank that owner that trained you in all of this stuff and you moved out and took all your clients with you. I know that's not funny, but it happens.
It's not funny, and it does happen.
Funny, and it happens. But make sure you are talking to a tax professional about the type of entity that you are. It is important. You don't know how many times I'll get something that's from a prospective client, and we look at that and we think, wow, why aren't they an Escort? Or why did they ever switch from a independent sole proprietor. So make sure that you're talking about those things. And if you don't have a CPA that's talking to you about those things, you need to find one. Make sure they understand your business. There is some savings that you might be able to have in self-employment tax if you were to switch. Now, just like I said about the ERC, if the amount of money that you're going to get back is not more than what's going to cost you to do the work, don't do the work. Same thing applies. If you're a sole proprietor on a Schedule C and it's going to cost you more money to file a tax return to switch to an S Corp, don't do it. If you're not going to save the money, it's not worth doing it. And sometimes tax professionals will recommend you switch because then they get paid to do another tax return. And that's not right. So let's make sure that when you're thinking about it, you're thinking about everything.
Yeah. Yeah. So, some of the things that I learned and all of these things, as I have an independent coaching and training business. So all of these things obviously apply. I'm sometimes traveling to shows, events, to the airport, to travel to my clients. I am glad to hear about the 100% of the meals, because with COVID and needing that connection with people, and Zoom is such a great way for me to do business. But I have some local clients here that we drive and meet at a restaurant and their session. So that's good to hear that the increase went up in the meals. I do have an office in my home. There is no futon in here. I want you to know, a chair, but no futons. And I don't necessarily have inventory, but I love the entity question. That's perfect, because I've been an LLC, but I'm still filing just under that, with that Schedule C, and it does still make sense for me. And my accountant does let me know that based on, where I'm sitting, based on revenue and, deductions and everything. So that was very, very helpful. I hope you guys, I honestly hope you guys got a lot out of that, just that one segment right there, because I think that's a lot of things that we don't think about.
Well, and I think just one final thing about a relationship between you and your tax advisor. You can't change things after they've happened. And so if you're taking a box of your stuff to your tax advisor on April 14th, thinking that they can magically get things done by April 15th and save you all this money, you're not doing yourself any favors. Having meetings throughout the year with your tax advisor is really important, because they can tell you and advise you on things that you can do. A great example is, let's say this year you had low income, but next year you expect to ramp up and you're going to have a ton of income. Then next year, maybe it makes sense to buy that new equipment that you're thinking about buying instead of buying it this year.
Yeah.
But if you don't have the conversations, you may not know that. And so that relationship's important to have with your tax person.
That is so true. So true. Okay. So another question came in from Don, and he says, can you explain the Escort distributions impact on personal taxes, whether return of capital or after cash basis is exhausted?
Okay. So S Corps. So think about your basis account in an S Corp, just like a checking account kind of. And your basis goes up when you make capital contributions to the business. Your basis goes up if the business makes money. Your basis goes down if the business loses money. The basis goes down if you take out distributions. Okay. So if you take out distributions in excess of whatever that checking account is, it's kind of like you overdrew yourself, okay, in your basis account, and you're going to pay capital gains tax on it. Okay, so as long as that basis stays positive, you can take distributions without having to pay tax. Now, you've already paid tax on that, though. Keep in mind, as an S corporation owner, when a business makes money, it passes through to you. So what happens on a K-1 is the form. On the K-1, your income from the business is recorded, and you report that, and it's subject to ordinary income tax. Now, a really great thing happened during the Tax Cuts and Jobs Act in 2017, that now you pay tax on 80% of that, not on 100%, because of the qualified business income deduction. So let's say your business netted $100,000 and you are the 100% owner of the S corporation. That means that on your tax return, you're going to show that pass-through income of 100,000, but then you're going to get a qualified business income deduction for $20,000. Now, because you're paying ordinary income tax in the year that the business made money, that's why when you take distributions out later, you don't pay tax on it.
Oh, okay.
Okay. Unless you go above basis, and then you have to pay capital gains tax on it.
Perfect. Don,
Did that explain that?
I hope that answered your question, Don. Let us know. That was very thorough. And I'm telling you, did I tell you how great April is? And she's delightful too. She's thrown in a couple jokes in there as well. All right. So now we are kind of, into the last couple of questions here. And one of them was this new ID verification.
Oh,
and then I'll give you the final one is going back to tax tips relief. So
okay.
Which one is a better suited one for us to start with?
I'll do the ID me first. Okay. So a question came in about the IRS is looking at a program where they would use two-part identification if you wanted to log into their site to get access to prior year returns and such. Right now, that two-part identification is using a credit card. And a lot of people don't have, well, I think a lot of people have credit cards, but what they're saying is that some people don't have credit cards. And so they've started to look at facial recognition as a way to do that. I think you're going to see that more and more. And I think for some people that's a little bit scary. But the reality is if the IRS can identify you with facial recognition and something else, this is two-part identification, then there's less likelihood of fraud on your items. And in all honesty, this little iPhone right here, that's how I get into everything, is with my face. And so if the IRS wants to use my face to identify me and my business, I'm okay with that. Now, this is brand new. There could be things that come up. Someone could email me today and say, how dare you say that? Did you even think about this? And that could happen. I'll admit that right now. But that's what it's about. It's an easy way for you to be able to log in to get your information. Right now, if you called the IRS and said, send me a copy of my return, they wouldn't even answer the phone. And so if you have an online access to it, whether it's using a facial recognition or something else, you might get what you want. And I think that's what the IRS is trying to do, is give you an opportunity to get what you want.
Yeah, from the vast records that they have, but it still has to be highly protected.
Right.
Yeah,
right.
Perfect. Let's see.
You want to talk about tips?
Yeah, I do want to talk about tips. And then there was one other thing that came through here, but I can't find it now for whatever reason. It disappeared. I think it was, I'm going to make the recommendation. I can't see the name of who it was, but you're going to get a replay on this. If you're in the group right now listening to this, you have the access to being able to listen to the replay. So I'll definitely make sure that I send some comments in there for you to go back and listen to April when she was talking about the cash basis for the Escort. So I think another question came in on that, but it's gone now. All right. Yeah. So here's kind of, we've been in the industry. I've been in the industry for 40 years. I would say for close to 40 years, we've been talking about a tax tip relief. It doesn't seem to make headway. I think people question why. I think some people understand why. I believe that our advocacies in our industry are still trying to push forward to make sure that they're doing all they can from this point of view to be able to give us that tax tip relief. But any updates or anything else you can share with us on that?
Right now, it's still out there. It's in that Build Better Back Act. So, we'll just have to see what happens. And for those of you that don't know what that is, the tip tax relief is something that would be for a business owner. So what happens right now in the restaurant industry is that if you pay FICA tax on the match on your employees' tips, as an owner on your return, you get to take a credit for that. Essentially, you get the money back. Okay, well, when that all happened, there must not have been lobbyists for the beauty industry in the room, right? Because the restaurants got it and the beauty industry didn't get it. Okay, so obviously there's been years and years, just like you said, 40 years of this. And I think the PBA has made huge headway. Gosh darn it, I wish I could remember the lady's name.
Maya.
Well, Myra from PBA, but who's the gal that's been heading this up outside of the PBA. I can't think of
Oh gosh. I'll think of it.
Paola.
Paola. I was going to say
Yes.
Phyllis, but I know that wasn't right.
Yes, and she's done amazing work. And so what's happening is that the beauty industry is just trying to get what the restaurant industry has gotten forever. So that when owners have to pay that match, they get it back.
Yeah.
So
Now,
hopefully it happens.
that all makes sense. And I think some of the challenges that we've been faced with over the years is that when you look at the restaurant business, a lot of times servers are not being paid full on minimum wage or above minimum wage. They usually, they're paid less. So tips become an absolute to their income. And so it made sense when the restaurants looked at this and they said, listen, we're paying them lower than minimum wage server prices. And then any tips that they come in, I shouldn't have to pay full on for that because of this thing. I think then they looked at the beauty industry, and obviously we didn't have the numbers. Numbers are important. We didn't have the power in numbers to be able to support this. But I think also then the industry also looked at, but you're charging, you could be making more than minimum wage per hour as a hairstylist, and tips are then considered a gratuity or a standard, but also above and beyond. And that, I think that stopped us for a few years, especially during those times that I was with PBA and we went to Capitol Hill to try and continue to fight for this bill. But I still hope it goes through, because I think that if you ask anybody out there, is tipping standard in our beauty industry? And yes, it is. I mean, even like, when I went and had some facials and some, and a little bit of Botox up here, I always ask, it's like, they want you to tip the server, but you don't tip the injector. So it's the medical person is a different entity than the service provider of beauty treatments.
Interesting.
But I had to ask because I didn't know. So I tipped my facialist, but I don't have to tip my injector. So it's worth it to ask, and it's worth it to be able to do this. But as salon owners, I think that, again, continue to rally around what PBA is doing and what other organizations are doing to be able to support this through. And
definitely,
I
agree.
We need the break, because I believe that salon owners, if you look at how much we had tax or tips on credit cards this year, it's an enormous amount, and the owners are paying full on tax.
Yep. And I think, that's one thing that if you're in an employee-based salon and you're thinking about leaving and going and doing this on your own, you need to understand all of the expenses that your current employer is paying for you right now. Because the reality is, it is a hard business to make a lot of money. Yes, you can. You have to work really hard at it. But when you think about, let's just go through an example, and then I know we're getting short on time. So we've got $100 ticket, just to use an average number. Let's say you pay commission of 40%. Okay. And I see higher, which I don't like, but let's say 40%. That's $40. Okay. That's $60 left. Then we have FICA tax, probably of $7. Okay, so $53 is what we're down to now, right? $53. We have merchant fees of probably $4 because you had to pay merchant fee on the tip that the stylist got, and merchant fees on the ticket, right? So now we're down to $49. Then we have the cost of the back bar, which was probably 8%. Okay, so that's $8. I'm down to $41. And then I have rent to pay. I have advertising to pay. I have your front desk staff to pay. I have supplies like foils, all those things to pay. At the end of the day, maybe out of that $100, I have $8 or $10.
Yeah. I mean, at this point, we know that salon owners are, if they're getting 10% or more, then they're doing pretty good. So
that's great. That's
but again, like you said, you just based that on 40%. I did. I think a lot of stylists out there still think that they can get a higher commission, or that they should be getting more than a 50%. And I can tell you guys today, it's not even reasonable to think that an owner can survive. So you don't want to be setting yourself up for saying, hey, you should be paying me this. But if you're on your own, I I challenge you to do what April just did with all of your expenses and see what your profit margin is in the end too. And being very, fruitful and honest with what that number is. And if you're making more money, that's great.
Right.
But you also don't have the same level of overhead that maybe an owner with multiple chairs has as well.
Right.
So
Yeah,
that is
sure.
where maybe some of your profitability can come from.
Yep.
Okay,
Yep.
April, we have to share the February 21st webinar, because you know what? You guys asked really great questions. And for all of you that were live with us, thank you so much. It was fantastic having you with us. Ralph, I did finally find that question. And what I'm going to recommend that you do is go back. I noted the time and go back and you can do the replay. I'm going to put this on YouTube. And I'll make sure that the YouTube link also goes on to our comments here so that you can just fast forward right to what you need as well. Or you have access to it here in the group to talk about that cash basis that you might still have a question on. Now, February 21st, you have a program that you're doing, a webinar that you're doing, and it's really, I love the title that you did. This is where the sweet side of April CPA comes out, is fall in love with your salon spa business again. Tell us a little bit about what we can expect for that program.
Well, it'll be a little bit different than some of our other programs. I really want to start from the beginning of, why did you start in this industry? And let's talk about how you can rejuvenate that love that you had, and things that you can do to embrace all of the things that have happened over the last few years. I know that it's been a hard few years, but I'm a firm believer that if we focus in on the positive and use those negative things to kind of catapult us into the future, that we can find great success. So that's where the title came from. And obviously we're going to talk about accounting and tax things too. But I really want to start with just the how to fall back in love with being a business owner again and being a salon owner again. So
I love that, because part of that was, we've spent the last 2 years navigating COVID, and we had to learn some new things that we never thought we'd have to learn as business owners, but we did it.
we
had to, I know that most of my coaching clients, they all lost staff, including our salon as well. We lost staff, and for various reasons. People moved away. People couldn't manage childcare. They couldn't manage the schools open one day, close the next. There was so many elements to all of this that, everybody lost staff. So there is this part where we're starting over again, but we have to appreciate what we've done, which is what our podcast was that April and I did last week. So you guys can go on to iTunes or Spotify, go to SOS Small Business Success Podcast, and listen to April and I chit-chatting about the appreciation factor of it all, which led us to today, Ask the Accountant, because there was a lot of people have a lot of questions today, because we're having to manage our businesses a little differently than maybe we did before. And we got to be way more structured in how we're doing this. And I think this last part that April is going to be offering in this webinar on February 21st. And what time is it again, April?
I want to say it's 1 o'clock Central.
1 o'clock Central.
Yep, 2 Eastern.
And it's probably going to be hour?
Yeah, I think an hour.
Hour long. And I'll put the link to register for this, you guys, but she is going to be talking about stuff that obviously is important, like we did today, but also from a standpoint of what are some things you can do to be more business savvy. Yeah, I love that.
Yeah, I'm excited about it. It's going to be fun.
That's what we need here. So, all right, I think we're going to wrap it up, you guys. I'm going to take a few minutes afterwards here, and I'm going to plug away on some comments. And April, feel free to join us on any of those comments too, that if there's a little bit more information that you'd like to share. And then you guys, the YouTube video will be up tomorrow, or again, you have the replay right here in the group if you are with us live in the group. April, thank you.
Thanks, Bonnie.
You were a wealth of knowledge today, and I feel better about all my time with my bookkeeper over the last couple of days.
You should.
I'm like, okay, I'm on track here. I'm on track. So you were generous with your time and your information, and I look forward to the February 21st webinar. and hearing more. And I'll certainly help April spread the word about that webinar so that you guys can show up to that.
Thank you.
Thanks, you guys. See you soon.